there was this interesting statistic which informed us, was that today people have invested a lot of money in instrumenting their environment. So they've bought observability tools like Dynatrace, Datadog, all of this to be able to capture these potential issues in their digital environment. And those products are great. They work well, right? They help with detection. But the interesting thing is that there have been many studies now that show that 50% of the issues are not detected. They actually are reported.
Oh, is this thing on?
Yesterday's price is not today's price.
Woo-wee! We got a good one for you today. Howard Wilson, CFO of PagerDuty. I basically stalked him for like a year and a half until I finally got him to come on. So this was definitely a good one for me to get. Really pumped he agreed. And he's seen some stuff. He's the CFO of PagerDuty, a company that's become mission critical for digital operations teams around the world. And back in 2019, I remember this, PagerDuty went public just after crossing the 100 million in revenue mark. Back then, it was relatively small to go public, but it was pretty important for them because they're a core part of company infrastructure. So they felt like the visibility was very much needed for their enterprise customers. And they set a new precedent for SaaS IPOs. So we'll rewind the tape and talk about what's changed since then, how the IPO bar has moved, how you can plug capability gaps when you're still scaling, and why working with advisors isn't always a dirty word. Howard didn't take the typical CFO path. He started as Chief Commercial Officer, which makes him uniquely suited to talk go-to-market strategy, customer segmentation, and what it really means when finance becomes a customer-facing function. We'll explore how his team looks past traditional SaaS metrics and digs into real usage patterns to find the signals that mattered. Oh, and how frameworks like V2MOM help align the chaos. All this and much, much more after a short word from our sponsors. Ready to plan confidently, close faster, and report with accuracy? Here's what sets Planful apart. Imagine purpose-built solutions for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. It's easy to implement Planful in just weeks with minimal IT involvement, enabling seamless collaboration across your organization's key financial workflows. Best of all, Planful grows with you. Its unmatched scalability ensures that no matter how fast your business expands, Planful can keep up. See why over 1,500 customers worldwide choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Visit planful.com/metrics to see how you can elevate your team this year with Planful. They will hook you up. It is planful.com/metrics. Tell them your boy CJ sent you. Planful.com/metrics. If you're a CFO trying to keep up with usage-based billing, complex contracts, and a finance team drowning in spreadsheets, listen up. Meet Tabs. Tabs is the AI-native platform automating contract to revenue for finance teams that are scaling fast. Whether you're selling custom terms, usage-based pricing, or a mix of PLG and sales-led, been there, Tabs turns month-end chaos into clean cash flow. It's like having a controller that never sleeps and a billing analyst who actually understands your pricing model. No more manual reconciliations, no more late-night close deadlines, just clean data from contract to cash. It used to drive me nuts that we do all the work to close the books inside our ERP in our FP&A tool, and then we had to export the most important part, revenue, to this janky spreadsheet and manually calculate what we did that period. And don't even get me started on the back of the envelope calcs we did to get to ARR based on all the unique contract terms we had floating around. Our investors would wince if they knew. Let's be honest, legacy systems here are not going to cut it, folks. Tabs is the system I wish I had in my CFO days. Fast-growing companies like Cortex, StatSig, Cursor, and others are already using Tabs to instantly generate invoices from any contract, automate RevRec, cash application, and get finance out of manual mode. If you want to automate the mess and fix the way money enters the building, baby, go check out tabs.inc/metrics. Again, that is tabs.inc/metrics. And if your team's still closing the books like it's 2015, now's a good time to upgrade. Hey, Metrics fans, let me ask you something. Do you know what keeps CFOs and finance teams up at night? Well, it's not the complex analyses or forecasting models. It's the mind-numbing tasks of chasing receipts, reconciling expenses, and juggling 5 different systems just to track company spending. I was talking with a finance leader last week who calculated her team was spending an astonishing 20 hours weekly just on expense administration. That's nearly 1,000 hours annually on low-value tasks. That's why I'm excited to tell you about Rippling Spend. Rippling Spend is the only platform that automatically handles your entire company's spending in one unified system. What makes it different? It's built on Rippling's workforce platform. So when org changes happen, like someone getting promoted or changing departments, all approval workflows, access permissions, and policies update automatically. Picture this. When your marketing director goes on vacation, expense approvals don't sit in their inbox waiting for their return. Instead, they're automatically routed to the right backup approver. No manual delegation needed. Meanwhile, your finance team gets real-time visibility into all company spending with no more month-end surprises. As a Run the Numbers listener, you can get an exclusive demo showing exactly how much time your org would save. Just visit rippling.com/metrics to learn more. That's rippling.com/metrics. Do it, guys. Howard, welcome to the Run the Numbers podcast.
Thank you, CJ. Appreciate the opportunity to chat with you.
This is so exciting. So you've been on my bucket list for a while because I was at a cybersecurity company and we were scaling really fast and we were trying to figure out all the comps that would be kind of in our area, and PagerDuty was one of them. And I think you've been a public company now, if I go back to 2019, for almost 5 years now. Is that right?
Yeah, so that's right. We went public in 2019, and I guess we're now sort of in April. In fact, that'll be 6 years that we've been a public company. So
6 years. Wow.
Yeah.
So you've had to do over 20 quarterly earnings calls.
I know, it's quite exhausting. It's amazing how quickly they seem to happen, though. It feels as though we're just through one cycle of sort of earnings, and then the next cycle of earnings preparation begins. So there is a real drumbeat to being a public company CFO that I hadn't quite anticipated just how intense that would be. And you have a calendar that you don't really control because it's set out there in terms of expectations of when you're going to do your earnings, depending on whether it's kind of just a normal quarter end versus a year end. And as a result of that, your whole organizational machinery has to be equipped to follow down that path. And so I'm really proud of how our team from the early days really oriented around, bringing down our close periods so that we could, in fact, have the data available to do the analysis, to be able to prepare for earnings. And in fact, it's been one of the areas that our team has done really well in terms of using automation and resourcing across different locations to be able to ensure that we can close within the right time frame and then get ourselves ready for earnings. So yeah, it's become a constant part of my life, and I plan my holidays around earnings.
I bet. And something I wonder with tenured CFOs like yourself is if the time to prepare becomes shorter, or do you feel like you still have to always invest the same amount of time just to know the business?
I think we've become more efficient, and we have a great IR person who has helped us break down the different constituent parts that we need to review. So we have I would almost say a recipe that makes it a whole lot easier now. The earlier days felt like a little bit more of a scramble, but now we understand what the sequence needs to be. And I think also the initial period of being a public company, I was still trying to figure out what to expect in terms of even questions on the public call and what the analysts would want in their callbacks and what to expect from investors. Now, of course, we've got to know our analysts over time, although there's been change. I'm more comfortable with a public call. We do really good prep around Q&A. So it feels less of a lift than it did in the early days. So it's less time consuming, but it still requires like intense preparation and intense concentration.
Tactical question. Are you the type of guy who likes to have it printed out on real paper, or do you keep your notes on a computer screen?
So I'm actually the person who does like sticky notes. I enjoy, when I come to thinking about Q&A, I find that I need to write the discrete thoughts down on pieces of paper for the Q&A piece. Obviously, when it comes to the prepared remarks, I sort of just have that on screen and I'm able to, read that, which is fully expected. I don't try and memorize it. Thankfully, I don't have to memorize it. And so that piece is relatively straightforward. But the Q&A is always the piece where it's more of the mental gymnastics, because you want to ensure that you are able to communicate in a way that is articulate, that makes sense, and that you're answering the question and that you are leaving both the analyst or the investor with what they need. And I believe in having a high level of transparency. But of course, as a public company, you need to make sure that in your interactions with individual investors that you are sharing the same information you've shared with the public. So that sometimes means that you may not have thought about something in the public call environment, and an investor then asks you a question and it's not data that you've shared publicly. So then you have to answer in a way that is still meaningful, but that you are still falling within in the regulatory requirements.
And part of that is probably the intuition of just knowing what they're going to ask at that point, because I was looking through your roster of sell-side analysts who cover you, and many of them have been with you for years.
That is correct. And many of them understand the business really well. So I think that's also been an interesting nuance for me, is that, as analysts get to know you and you get to know them, you understand what's important to them. For those that have covered us for a long time, they understand our business model really well. They understand our product, our customer base. And so the dialogue has a different flavor to maybe somebody who's new to the story. And so then you're having to provide more context when you're answering questions for those folks.
Totally. I want to rewind the clock a bit to 2019 when you went public, and you just eclipsed 100 million in revenue, which by today's standards would be on the smaller size for an IPO. There have been some other companies like Sentinel One. I think they were in the 90 to $100 million range. I'm curious, how do you think the bar for going public has evolved since then in terms of size?
Yeah, I realized that, we were small for going public even at that stage. Like there weren't many companies who were just past the 100 million mark who went public. And we were intentional about going public, although we were relatively small from a revenue scale, because we felt that it would be important for visibility around the company. And because we provide critical infrastructure to our customers, it gives our customers confidence in us being a public company. When you're a private company and they're wondering, like, are you going to be a going concern in a year or two? You find that we were having to do a lot of explanation to reassure customers around our financial viability and that the business is well run. And going public just removed that. And for our enterprise customers, which were even at that stage becoming a more important part of our customer base, and increasingly so even now, going public suddenly meant, hey, they have visibility into how we're doing as a company. They can see how strong our cash flows are. They can see, our balance sheet. And I think that was important in terms of helping get the PagerDuty name greater visibility and greater confidence for our customers. But I do think that the bar has changed. At the time when we went public, we weren't profitable on a non-GAAP basis, but we had a clear path as to how we would get to profitability. And so going out like kind of just north of 100 million and not being profitable in today's environment, people would say like, that's a non-starter, right? Unless you're growing at like some, obscene revenue growth level. So I think that where we are today is that there are expectations around companies either being at greater scale or at least having a very clear path that if they're not yet profitable on a non-GAAP basis, that they're going to be there fairly soon. And I think that's just a shift in terms of my market dynamics.
Yeah, and now you're doing more than 100 million, well more than 100 million per quarter. So it's definitely multiplied since then.
That's right. And we've also been profitable on a non-GAAP basis now for 3 years. So, and with generating really healthy free cash flow. And that's become an area that's been interesting to see. It's one being the shift in the market and also part of the maturity of our company, that far more of our investors and our coverage analysts are focusing on our free cash flow generation as being a mechanism to understand like what's the real value of the company.
I want to go back to something fascinating you said around the benefits of going public, in particular the sector that you play in, because companies depend on you for critical infrastructure and for things that are very meaningful to their company succeeding. I've always thought of IPOs as kind of like prom. It's like a marketing event. It's like this big coming out party for, getting visibility for buyers. But I never thought about it from the angle of like, okay, we trust them to fill this critical gap in our tech stack because we have visibility into their financials.
Yeah. And I found this from a customer perspective, direct conversations that I had with customers understanding how important it was for them. So I would say our strongest value proposition as a customer is trust. They know that they have to rely on us to be up even when their own systems are degraded and not available. So at the heart of our relationship is this value proposition around trust. I hadn't anticipated to what extent what that meant for a customer in terms of saying, we want to make sure that we're making long-term software investments in companies who have durability. And that to me was something that I hadn't anticipated, but certainly was a great lesson for me that you have to think about what is the product that you're selling and what place does it play within the customer's landscape and how do they view you, and then understand what's going to be important for them.
That's great advice.
And actually, just to your analogy, I actually use the analogy that the IPO is a bit like a wedding, but the ongoing, enduring part of the company is the marriage. Like, you got to make this marriage work.
Yeah. Hey, thanks for listening. We'll be right back after a word from our sponsors. As a CFO, you're expected to bring clarity to everything, including how your company manages ownership. The tools you use should make that easier, not harder. But when they come with hidden fees, data you can't always trust, and support you can't rely on, you end up with more frustration than clarity. That's where Pulley comes in. Pulley is the cap table management platform built for finance leaders who need accurate, decision-ready data from a system that works for your business, not against it. With Pulley, you get intuitive workflows, audit-ready reporting, and support you can count on, all backed by predictable pricing you can plan around, so you can stay compliant and make smarter decisions about your company's future. Manage everything from fundraise modeling to ASC 718 reporting to custom liquidity programs, all on one trusted platform. Hundreds of high-growth companies like Linear, Fathom, and Runway trust Pulley to help turn ownership into a strategic advantage. And joining them is now easier than ever. You can switch to Pulley in as little as 5 days. And for a limited time, they're offering 25% off your first year. To claim your exclusive offer, visit pulley.com/mostlymetrics. That is pulley.com/mostlymetrics. pulley.com/mostlymetrics. This episode of Run the Numbers is brought to you by Navan, the all-in-one travel and expense solution. CFOs and finance leaders, let's be honest here. Your T&E process is broken. Manual reconciliations waste valuable time, policy violations drain money, and limited visibility creates unnecessary risk. Nobody likes that. Navan cuts through these problems, giving finance teams the clarity and control needed to close with confidence, faster and with fewer headaches. Connect your existing eligible Visa, MasterCard, or American Express cards directly to Navan and keep all your card rewards and banking relationships. Get real-time expense tracking, automated policy enforcement, and AI-powered reconciliation that works. Companies like Anthropic, Unilever, and Zoom trust Navan to manage travel spend smarter and increase compliance. Are you ready to modernize your T&E process? Visit navan.com/runthenumbers for your demo today. That's navan.com/runthenumbers. Tell them CJ sent you. They'll hook you up. What does the future hold for business? Ask 9 experts and you'll get 10 answers. Bull market, bear market. Rates will rise, rates will fall. Can someone please just invent a crystal ball already? Until then, over 40,000 businesses have future-proofed their companies with NetSuite by Oracle, the #1 cloud ERP, bringing accounting, financial management, inventory, HR into one fluid platform. With one unified business management suite, there's one source of truth, giving you the visibility and control you need to make quick decisions. With real-time insights and forecasting, you're peering into the future with actionable data. Whether you're closing the books in days, not weeks, you're spending less time looking backwards and more time on what's next. If you listen to this podcast, you'll know I ask CFOs all the time to rep their tech stacks, and I would say almost every one of them use NetSuite. And that's what I would use too. Whether you're a company earning millions or even hundreds of millions, NetSuite helps you respond to immediate challenges and seize your biggest opportunities. Speaking of opportunity, download the CFO's Guide to AI and Machine Learning at netsuite.com/metrics. The guide is free to you. That is netsuite.com/metrics. Ooh, yeah, it's netsuite.com/metrics. Please, guys, I really need this. I'm going on 7 years of being married now, and I got 2 kids, and I can say that the wedding was a big celebration. It's the ongoing maintenance and the lifestyle afterwards where you got to put in the work.
That's right. Absolutely.
Howard, now that we know just kind of the size of the bread box here, for lack of a better term, when you did IPO, I would imagine you didn't have every expert you needed in-house.
That's exactly right. We were still relatively, small company, even just in terms of, total number of employees. And my finance organization was relatively small at that point in time. And so it was a situation where I got some really good advice when we were busy preparing for the IPO. I was chatting to, in fact, one of the partners at PwC, and he said to me, you've got to try and think about what are the things that you are going to do on an ongoing basis, and how do you develop the capabilities around that. And that made me sort of create this framework of, I put everything into two buckets. What were the things that are one-offs that were like specific to getting ready to be a public company and the IPO process? And what were the things that needed to be durable and that were skills and capabilities that were going to be important for the ongoing health of the business? And while sometimes my team were really keen to be involved in the IPO activities because they're fun and exciting, we tried to moderate that to the extent that we could so that they could rather build the capabilities that were long term. So what that meant is when we went out effectively, our internal audit company to a big accounting firm, because we had to then go and build our own internal audit capability. And that took us about a year to put in place. I'd already hired a really great controller, so I knew that we had strength in that space. We were evolving what we needed from an FP&A perspective. Initially, we had a third-party IR firm doing the IR work for us, and we still have an ongoing relationship with them, but they were key in terms of just helping us getting the basic frameworks in place. But then we were able to hire in someone to effectively build that IR capability internally. So not all things are created equal, and there are some things that you can, in a sense, delay hiring until you are further along. And there are things where there are good providers in the market, and so take advantage of them.
What's your perspective on working with advisors since then? Do you think that they can fill functional gaps for a company of your size?
Yeah, absolutely. I think one needs to get the balance around use of advisors. So we use, a third party IR firm still today, just on a retainer ad hoc basis. We have one of the principals of that firm, the Blue Shirt Group.
Oh yeah, I've heard of them.
And they still continue to provide us with really good advice around our earnings process. If we have something that's a little bit unusual, we know that we can rely on them. We retain a group of advisors around specialized areas where we need assistance. And I think that's the balance that you need to have. You can't expect to have all the capability in-house unless I think you're a much bigger scale than us.
When you think about the capabilities you did need to mature in-house, what do you think was most critical to get right? Like, to give you examples, was it the forecasting ability for your FP&A team, or was it like the SEC filing for the accounting team?
Yeah, so I kind of broke that down into three areas that were like critical areas of focus for us to begin with. The one was certainly around the accounting. The standard of accounting that you need as a public company is much higher. And we made sure that we focused on, having a strong controller and a strong team in place to make sure that we could meet the requirements from a public company perspective. And then the SEC reporting is like an unusual area, right, of expertise. I was going to say an unusual beast, but that's probably not a good word. But it's it has, it's intense requirements and requires high levels of accuracy. You need to ensure that you're managing that effectively. So that was one of the first areas where we hired a really talented person in to head up that function. And then the third area was around FP&A and forecasting, and just trying to understand that whole lineup of guidance versus your forecast versus your internal plan. And you end up with all these iterations, and it sounds at a conceptual level as though, oh, this should be really quite easy. You have a plan with your board, and then you have a stretch plan for your internal target, and then you have a forecast that you're maintaining, and you're going to provide guidance relative to your forecast. And it sounds easy in theory, but you're not forecasting for one quarter, right? So you're always having to think about, how's this going to, if I make this forecast now for the full year, how does this play out each successive quarter? What does this look like? And there's an art and a science to doing that. So those were the three areas for us that were my primary areas of focus. Hired talented people in to lead those functions, and we built strong capability as a result. And also selecting the right tools. So I would say that, when you're a private company, you're doing a lot of stuff that you're stitching together by hand or in Google Sheets or in Excel. And when you're a public company, just the requirements around the transparency of what you are doing requires better systems. And so upfront, we'd made investments in things like NetSuite for our ERP, but we made investments too into things like Avalara to cover our tax, and Zora to manage our billing, Anaplan to help with forecasting, Workiva to manage the whole SEC reporting requirements in terms of document preparation and making sure that it was all accurate. So those were things we did in advance of going public and fairly early on. And of course, there's any number of other products one could use, but there's a set of products that you just foundationally need to have up and running well, in order to make that process less onerous.
Yeah, better to get those implementations out of the way before you go public.
Exactly.
I want to go back to something you said about the beat and raise forecast for the benefit of listeners. It sounds simple on paper, like, oh, this one's discounted by 5%, this one's discounted by 10%, but it turns into like five-dimensional chess because each quarter has a knock-on effect on the next.
That's exactly right. And it's sometimes, when we went public, that was in the mode, we were a company that was growing above 40% at that stage. And there were a lot of other players out in the market growing north of 30%. And the expectation on the street was that you would beat the top end of your guidance. Now we're more in a mode where the expectation is that you are going to be in the range, right? There isn't all this expectation of beating the top end of your guidance. But back then, you had to sort of almost factor in, how do I get the balance right of like not guiding in a way that disappoints, but guiding in a way that still keeps people's expectations in the right area, that they don't get too enthusiastic and over enthusiastic around what they put into their models. So that's the challenging part, and trying to establish what is that level. We had some companies at that time who, had built a reputation of they were growing at 40%, but their guidance was always to go out with like 30. And so everybody knew that was kind of their model. We didn't have quite that level of flexibility. So we were sort of guiding to a narrower range, but trying to always make sure that we could then get to the beat, particularly on the top line at that stage. Now, a lot of the focus for us as a company has been around sort of how we're doing in terms of profitability. And so there again, we have to make sure that you don't want to set a pattern where you give the guidance that everyone says, oh yeah, that's right, they're going to do, 2 points, 10 points better. You want to make sure that they understand what your methodology is. And if you're thinking of changing your approach to guidance, you've got to tell them. It's like, I'm taking a far more conservative to guidance here. My expectation is not to be above the range, it's to be in the range.
It's so funny because that's like truly the game inside the game, where you're not only managing the financial outcome, you're managing expectations of your financial outcome.
Yeah, that's right. And part of being a public company is that there's always this concept of like, what's the whisper number? So the analysts have put their numbers out there, which are plain to see, and you can see what consensus is. But sometimes there's an expectation amongst the investor community that could be different. And you need to think about, how do you ensure that you're in tune with investor expectations, and make sure that you don't inadvertently set higher expectations with investors that are out of line with where the street is in terms of their consensus, because then you're just giving yourself something difficult to manage and you're going to disappoint.
Well, that's a great segue, because Howard, you've steered PagerDuty through both market exuberance and downturns. And so I guess reflecting on that, in what ways does volatility actually create opportunity?
Yeah, and volatility is not fun. I mean, we're living through volatility right now.
We are, as we record this.
Yeah, and so what I would say is, if I look through some of the periods that we've had to manage through, one was actually the start of the COVID pandemic, and then also the economic dislocation, which has been relatively sustained for the last 2 years. The opportunity that I think that arises is really more from a company perspective than I'd say from a pure finance perspective. So whenever you see these market shifts, it's really important to evaluate what is the message around your company to your customers, and then what is that message? How do you help your investors understand that message to your customers? So I'll give you one simple example. When PagerDuty went public, we were effectively a single product company that was very much focused on engineers. And our messaging was very much around helping improve developer productivity so that engineers could move away from solving problems and spend more time on innovation. And that was a message that resonated for a long period of time. When we got to the pandemic environment, all of a sudden teams were distributed. And we had to think about, well, how does PagerDuty play a role within this new distributed environment? And what we found is that, yeah, we've actually been supporting distributed engineering teams for years, right? So it didn't change that environment. But what we did need to do is we had to help customers who were dealing with this new reality of distribution and showing them how PagerDuty as an orchestration platform would help them deliver even a higher level of service to their end users in that environment. So our messaging and positioning had to change. Once again, we see this economic disruption 2 years ago where we saw, high inflation, high interest rates, a real curtailment on spending. So we had to think again about what does our platform do for companies in terms of a cost-constrained environment? And we found that, again, customers had been using us to drive efficiency because they felt that they were able to not have to add to their headcount by using PagerDuty to do some of the automation, right? So I think that's always the piece that even as a CFO, you're first a business person. And as a business person, you have to think about, what's the relevance of the product that I sell within the current environment. And that then helps you frame that up appropriately, both for customers and investors. Internally, it means that your finance organization starts getting behind like what's important. So what are the marketing programs we should be spending money on? Should we be spending money on enablement for our sales team to ensure that they can position the messaging more appropriately? What are the kinds of events that we should be running now versus what we did before? And we've seen that change from, before COVID, huge user conferences once a year to suddenly everything being virtual, to people trying to figure out what's a hybrid kind of event look like, to now what's typically like people doing smaller regional style events where they can get people within a community. So I think you just have to be flexible, right? Be willing to learn and adjust and not be rigid in terms of how you think about these things.
I love that. And one of the topics we hit on in this podcast a lot is the CFO's job of translating the macro outside the company to the micro inside. And it's probably your job more than anybody else at PagerDuty to help people figure out what matters in the eyes of the people outside.
That's right. And I think the key, I often think my role within the company is to ensure that people don't overreact. And there's, you want your employees and your customers to have a conviction around stability. And obviously, when you're in an environment where there's a lot of volatility, you have to think about what can you control. So my messaging internally is often a reminder to our team around where the company is at. Oh, look, we have a strong balance sheet. We're generating healthy free cash flow. We have a strong, loyal customer base. These things are things that we know and that we have. And now what can we control? Well, we can continue to serve our customers really well. We can improve the value that we deliver. If we do those things, we're going to see that translate into, top line revenue growth. If we think about things that we can control in terms of expenses, that's going to translate into the following. So irrespective of what's going on in the broader environment, I think the role of a CFO is to provide the voice of reason, the calm spirit around providing the context. And that doesn't mean you deny what's happening. You have to explain what's happening. So, we're in an environment where there is a lot of volatility. You might see that the stock market right now is in a volatile position, but this doesn't change what we're doing as a company, right? And I've shared with the team often that, we may be having our worst day and our stock might be trading up. We
Ah,
might be having our best day internally and our stock might be trading down. But we don't control the market. What we do control is our results. And it's part of the focus of our team is to really focus on how do we continue to deliver sustainable results.
and I love that focus on operations and controlling what you can control. And you started as chief commercial officer before becoming CFO. I've heard you describe yourself quite humbly as the accidental CFO on other podcasts, which I find is funny.
Yeah.
But how has your commercial background shaped your view of the CFO's role within framing the go-to-market strategy?
I think it's been really helpful because I do look at things from the context of often the leading indicators of business success as opposed to the lagging indicators. It's very easy if you're in a finance role to focus on things like revenue, which is actually a lagging indicator, or to focus on operating margin, another lagging indicator. When you've had a commercially focused role, and I think this is true of a lot of CFOs today who have a much stronger business orientation than maybe 10 or 20 years ago, you start thinking about, well, where's the point of influence, right? What actually drives demand? And what are the things that are going to actually lead to improved customer acquisition? What are the factors that would drive, customer expansion or customer retention? So I do think that that's been helpful for me. I do have the benefit that I think when I speak to our sales team, I can speak with conviction because I have been a sales leader before. I've been a person who I've had to sell stuff. I've had roles I've been a COO before. I've run operations at scale in much bigger companies. And so I understand a lot of the challenges that our field teams are dealing with in terms of simple thing like, oh, I've got this complicated order that needs to be processed and nobody wants to help me. It's like, well, hold on. There are people who will help you. Let's just let's understand what the problem is. So I think that's been helpful. I come with a fairly rich context of the front end of dealing with customers. And because I started out as a software engineer and I ran development teams, I understand that building code is not easy. So I come with a high level of empathy.
Empathy. That's a great call out there. And I think you develop empathy for like coding isn't like something that you can just pick up in a day. Well, I guess now with AI, maybe it makes it a little bit easier, but doesn't mean it's good code. And then the empathy around having to sell stuff. Like I always say, selling something is the hardest job in the company.
Yeah. I often feel that the efforts of salespeople can be underappreciated because often people will think, and I know this is a stereotype view of finance and it's not necessarily true, but often it'll be a view of like, well, salespeople are swanning around and all of a sudden they're getting great commission checks and, finance people are working, the long hours at the end of the financial year for less reward. But I do understand the complexity of selling. And I do understand that going out there and just, having the courage to ask for an order, like asking a customer to sign something and spend money with you. Yeah, it's a scary thing to do. And so I appreciate that everyone comes with a different set of skills, and we need to always focus on how do we build that understanding, both for the sales team. I've actually done this a number of times where I've encouraged members of our team to, join a salesperson for a few hours, join them on a call, just to hear what it sounds like. And likewise, I've encouraged folks from other parts of the business to come and spend, a day, the finance team, to understand what it's like to have to deal with, poorly formed order requests, whatever it might be, so that you build that understanding. And I've seen how that helps people cooperate and collaborate far more effectively.
Howard, you've talked about a commercial mapping process where you identify what segments and what verticals you're in and then map out potential investment areas. I'm hoping you can walk us through what that looks like and how finance participates.
Yeah, sure. So we're a small company relatively, so we don't have infinite resources. If you're a larger company, you're able to have a lot more resource to go around, so you can afford to maybe spread yourself with less focus. But because we approach this from the view of, this is what we have to spend, I try to ensure that we are allocating our capital to the areas where we're going to have the most impact. So we're also a company that serves really small companies. This could be like a startup with like a handful of people, all the way to, Fortune 100 companies. We have like 70 of the Fortune 100
Wow.
are customers at PagerDuty. Now, that means that you have companies who are spending a little to customers who are spending millions with you. So it would be great when you have this horizontal platform if you could just say, hey, I'm going to go after all the verticals, I'm going to go for all customers, and I'm going to just, try and cover the world. But what we found is that that's not the most effective strategy. So the work that we did was to say, well, given the experience that we've had as a company over the last, call it 10 years, let's have a look at where are the verticals where we have been the most successful, right? And when we look at those verticals, and we've got like 6, 7 verticals that are primary verticals for us, then there are characteristics of those verticals that we see are common. They tend to be companies that, have a high digital requirement. They tend to be digital first in terms of how they think about their customers. So that's why we have things like, software and technology, financial services, travel and hospitality, media and entertainment, telecommunications, e-commerce, right? These are the things so for us, it was a case of saying, look, these are the areas where we've been the most successful. So how do we ensure that we replicate that? And whilst we may have other customers in verticals like manufacturing, or who may be some even adjacent to agriculture, they're not going to be the areas where we're going to be able to grow the fastest. So that was the first thing that we do is have a look at it by vertical and also by business segment. So we break up the world in terms of looking at SMB customers, and we use, companies that have revenues below 50 million as the SMB cutoff. Within that, we've got like VSB, which is like even the very small part of SMB. We then have, for us, we look at the mid-market segment as being from 50 million in revenue to $1 billion in revenue. So that has a particular analysis. And then enterprise is companies that have revenues above $1 billion. So when you look at the revenue slice against the vertical slice, you start seeing what's the sweet spot of where you have your most success. And then that helps you frame, what does your go-to-market motion need to look like? Obviously, when you're dealing with SMB where they're not spending money, you want to try and be as efficient as possible. So that, regardless of the vertical, we say must be product-led growth, must be, self-service as much as possible, programmatic, small team to deal with hand raisers. And that's really effectively how we deal with SMB and the lower end of mid-market. But then when we look at the other sectors, we say, okay, we need to now figure out like how would we build our field-facing teams and how would we organize them around vertical opportunity and segment opportunity. So that's roughly, there's a fair bit of detail below that, but that hopefully gives you a picture of how we think about it.
That's such a beautiful process because most companies will start out with, hey, this is our white hot center. Maybe it's like, we're really good at selling to technology companies between this size and that size, or we're really good selling to other fintechs. But after that, you have to figure out what's the playbook to get into all the other areas. And it may not be as straightforward as you think, or maybe you can do it, but it's just not on a unit economic level, like rational.
Yeah, and that was an important exercise for us. Even when we started, a new sector for us has been public sector, including federal government. And part of what we saw is that just from our product-led growth motion, we'd started to get interest out of public sector accounts. So then we said, let's run an experiment, put a small team looking at public sector. Can we actually be successful? And we found that even with federal government, we managed to get into larger accounts. So that was then confirmed the investments we were making around FedRAMP, for example. And that then said, well, let's build a team. And so you're sort of taking those early signals. So when you have a product-led growth platform, you're casting the net pretty wide. It doesn't matter what segment, right? But then you can see the signals, which will then help drive the right kind of behaviors. And then you can say, okay, let's invest in this intentionally and see how we can make that grow.
I really like how you called out running these experiments, because people in theory are like, yeah, that sounds good. Like, let's test the waters before we go. But you may have something on your plate, like we need to do FedRAMP or we need to be SOC compliant in order to get these bigger customers. And that's like a big investment for a lot of these companies.
It is. And it can run into millions of dollars of investment if you're running a global platform with high levels of redundancy, and where you're needing to meet these requirements, where you have these expectations around your own delivery.
Howard, I want to go back to talking about the finance team and their position within the customer value journey. I'm curious, do you think finance in some respect should be customer facing?
It's interesting because I've debated this for some time. I almost think that there's this mode of where I would say, yes, sometimes finance ends up being customer facing, but the reality of most finance work does not directly touch the customer unless doing invoice collection or you're involved in some part of the order management process. And there you want to specifically train people around heightened capability to be able to deliver a good experience. But I do think that customer awareness is really how you need to think about building your finance organization. So for us as a company, we have a value which is champion the customer. And sometimes we've used this to say, well, you have internal customers, so you should champion your internal customers. But I've actually had my team focus on think about the customer who sends PagerDuty money, right? That's the customer that we ultimately want to serve. So how do you build awareness around our customers so that you are able to serve the organization, partner with the organization, drive the organization in service of that end customer? So practically how that plays out is that it might mean that there's a decision that a finance person needs to make. And one of the things I want them to think about is like, what impact does this have on the end customer? We do things like we'll have members of the rest of the organization come to our monthly town hall, and we'll have like a salesperson talk about a success story that they've had with a customer. So to build some of that awareness, and we've invited customers in to share their experience directly with our team, so that they can also hear and they can hear directly why this is important to our customers. I encourage, much like I engage with customers, I'm the executive sponsor on a number of accounts, of our large accounts globally. I meet with our customers. I hear from them. Last week, I was at an event in Sydney, met with a number of execs from key customers in the region. And I'm there not to tell them a whole lot of stuff, but to really just hear what are the things that are important to them. So I think it's about creating a culture of customer awareness and thinking about what's the impact that this could have on a customer. So when you respond quickly to something, this could have a direct impact.
And I think finance people, customer support people, anyone who's really not on the front lines, sometimes they may think, well, I'm not talking to the customer. They don't really know that I'm here. But I think every interaction they have with your company is a customer-facing interaction in some way. Like if you change the payment methods that you accept from your customer, that impacts them in some way, and that has a reputational impact.
That's exactly right. And I've long encouraged my team to sort of work backwards from what they do to what were the things that were further up the chain that led to that situation, so that they can think about it. Oh, I might be booking an order, but what was the effort that went into this? Or I might be following up on an invoice. And so when a customer has a query on that invoice, why do they have the query? Was it something we didn't communicate well to begin with? Was there a problem with the order form? Was there a miscommunication between the customer and the sales rep? So how do you get to the heart of delivering a good experience?
All those details and interactions matter. Howard, I want to change gears a bit here. In SaaS, we all love our metrics, net dollar retention, CAC payback period, you name it. But PagerDuty seems to look deeper just based on me reading through the earnings transcripts and just hearing you speak. I'm hoping you can hit on how your team uses customer usage patterns actually to complement or even challenge some of these traditional SaaS metrics.
Yeah, so, the one advantage we have as a company is the way that our customers use the platform to solve problems provides us with a rich data set. And so one of the things that we've done as a company is essentially define what we call an operational maturity model. And based on how customers use the PagerDuty platform, which might not be the only signal as to the operational maturity, we're able to develop scores of where they actually sit with respect to that operational maturity. So are they, it's on the one end is ad hoc used to being reactive to then shifting to proactive to being predictive. And so that helps us as a company, again, tailor our efforts in terms of how we engage with our customers. So that's kind of been an important part for us in terms of being far more thoughtful in terms of driving a better customer experience. That doesn't necessarily translate into a direct activity for the finance team, but our FP&A team ends up being one of the custodians of most of our SaaS metric data. And they then use that data, all those dimensions of vertical segment that I spoke about, looking at CAC by segment, looking at LTV by segment, looking at those to help drive the investment decisions that we make. Sometimes what we're doing is we're taking the combination of the data that we're having in terms of customer maturity and customer usage as a mechanism to help us decide again, like, do we need to invest more in these particular areas or these segments because those are not aligning? So it's helped us formulate a view around even investing in effectively a professional services team. So when PagerDuty started out, we didn't really have any professional services because single product, easy to use. We prided ourselves on the fact that, you could be up and running in minutes, and our customers were mainly engineers. So they were. But as we've grown as a company, we have larger constituents. They're not all necessarily the most technical people. So there was a need for us to be able to have professional services who can help people get started or help them beyond just a support service. And it was some of that analysis we did on the data was to saying, hey, we've got some customers over here who are not managing to kind of, grow out of this level. And it's because we need to provide them with services that they're happy to pay for, but we needed to identify that need.
I think what you're getting at is more of a proactive look before like it shows up in the metrics, because you'd said at the top of the pod, Howard, like revenue is essentially backward looking, right?
Yeah, that's right. It is about trying to map those different things along the way that would either create input to an existing revenue stream or in some cases a future revenue stream.
And I have people ask me all the time, hey, we want to advance our finance function and take a more data-driven approach, which is like a kind of a generic way to say we just want to get better at how we look at the metrics. And what I usually try to say is like, get closer to the product data, because that's going to tell you where the puck is going, for lack of a better term, before it shows up in your net dollar retention rate. Like you should be able to predict some of the expansion patterns based on how often people are logging in, how many events are being logged.
That's right. And what we've done over time is we've sort of been able to model out what the expansion would look like by cohort. And then we've been able to layer in. We know, for example, customers that use multiple products are more retentive, right? We know that customers that are using some of our products with higher levels of maturity are more retentive. If they're using us in the least sophisticated way, they're lower on the maturity curve. They're more likely to downgrade or more likely to churn. So we've used that data to help us build better models as to, one, where we focus activity, but also to understand like where risk could lie.
And I think it's so important to meet the customer where they want to transact. And part of that is figuring out like how they reached you in the first place. And I've heard you talk in the past, Howard, about interesting or unexpected pathways that customers take to reach PagerDuty. Would you mind hitting on that for a second?
Yeah, sure. So what we found is that one, we've had a strong product-led growth motion, which means that often people would find us online, right? Or they would find us because someone says, oh, you should have a look at PagerDuty. And it's pretty easy for us to go, to the internet, find us and get started.
We bought you on a credit card at my last company.
Yeah, so there you go. So really easy to get started. So that means we've created like a pathway that removes the friction from people starting out with PagerDuty. But one of the things that's been interesting to me has been to see how when we're in an existing customer, how we get to other users within the customer base.
Oh, okay.
And that's often referential because in development organizations, what does happen is that we may be used by one team and others see the quality of life of that team improving and they go, we'd like some of what they have, right? And as a result of that, that team is then able to almost advocate internally to another engineering team. But what's more interesting to me is that often the engineering teams, particularly those that have an open, engaging culture, tend to take us into other parts of the organization. So we've actually moved into security teams because the engineering team has used us, and the security team goes, I have an incident management problem, and it looks like you folks are doing that. Or we've gone into legal teams where an engineer has proactively said, you're trying to manage this thing around managing this compliance in a timely fashion and being able to orchestrate the right people. And so they advocate for us, and suddenly we find we're in a different team. So there's some of the where customers are using us and using us well, they often advocate to other teams. And that led us to the development of a very specific offering around customer service operations. So there was this interesting statistic which informed us, was that today people have invested a lot of money in instrumenting their environment. So they've bought observability tools like, Dynatrace, Datadog, all of this to be able to capture these potential issues in their environment, their digital environment. And those products are great. They work well, right? They help with detection. But the interesting thing is that they don't detect all the issues. So there have been many studies now that show that, 50% of the issues are not detected. They actually are reported. So what happens is that it's somebody who's trying to check out, who's trying to book a ticket, who suddenly finds that it won't work. And so they're having to then, on chat, because no one calls nowadays, but on chat, they're sort of in interaction with someone around like, hey, I can't check out. That could be the first signal that there's a problem. It hasn't been necessarily that there's an issue with how the application's behaving, but it's, or with the availability of the application. It's another issue that now gets detected by a human. So we created an offering that actually integrates the customer service piece, so that if I'm at the end of the chat and I'm using a CRM, customer service tool, I'm actually very quickly able to see, is there an issue with that service that's already in being taken care of? Or is this a new issue? And right there, I'm able to go straight into PagerDuty, although I wouldn't know it because it's just another tab within my environment. And I'm able to then effectively create the issue, which can mobilize that development team. I'm also then able to communicate with the customer. We haven't seen this issue yet, but I've actually got my team looking at it. And in that space, I'm now able to pass on to the engineering team a real live example of the problem that someone's experiencing. So that reduces dramatically the time to giving that customer a good experience. So that was also a case of the data started showing us where the customer, the problems that customers were solving. And so it took us into new area. And I personally feel that, we use PagerDuty internally across our internal IT. We have it in our sales ops function. We use some PagerDuty products within finance. All of these around orchestrating work in some shape or form, whether it's unplanned or whether it's proactive work. And so we're allowing the product take us to different places in the organization.
Before you describe the mapping process you use, that by segment and by industry, you can go out and acquire new customers. But what do they say? The best customer is the customer you already have. So you also have to do the mapping exercise internally.
Yeah. And it's been interesting for us to see, like before we developed that offering, like we became aware of this issue. We started seeing some reports. So then we looked at our data and we said, well, customers weren't buying a SKU from us that said that they were using us for customer service. So we used the data to say, well, what roles? And we suddenly saw like, there are all these people in customer service roles that are already using us. So we spoke to some of those customers. They said, yeah, we're using you for this. That was before we built like fancy integrations. So then we built a workflow application to make it easy for them.
I love it. Howard, gearing towards the close, I'm going to take you into what we call our long ass lightning round. So something I ask every successful CFO on the show, what's an example of something you've messed up in your work before?
So I feel that I'm always learning because I often, you often make mistakes as you go through life. But I think, when I look back on my career, I've made one of those typical errors where I sent an email to the wrong person at the wrong customer at the wrong time. early on in my career. And that was kind of a reminder to me to take extra care. So today I'm still very carefully checking the to line when I'm sending out an email. But, it wasn't catastrophic. But I think one has to approach all of this with like a learning mindset. Like you're going to make mistakes. So how do you learn from them?
I've zipped off a couple emails to the wrong person before. I think what's interesting is how you recover from it. Do you lean into it and act like it was for them the whole time? Or do you say, sorry, that was like totally on me. My bad.
Yeah, my view is always that I just have to go like, oh, I'm so sorry. I messed up. This was the wrong one. Yeah, it's easier.
I was with an exec that fired off an email to a customer asking them like their opinion on something, and they could tell like right off the bat that like it was not meant for them. And he very smoothly just said, oh, my bad, but I also want your opinion on this as well. What do you think?
Yeah, so there you go. You could turn that into
stick the landing
into something. Yeah.
All right. If you could tell your younger self something knowing what you know today, what would you tell him?
I would say, don't stay in your lane, and people are more willing to help you than you would imagine. And my experience has certainly proved that out, is that sometimes we're almost afraid to ask people for help. But every time I've asked people I've never had an instance where I've asked someone for help and they've said no. So we often don't ask, but if you ask people, they'll either help you or point you in the right direction. So don't ever be afraid to ask for help.
Can you think of an instance where you've asked somebody for help and maybe you're like, they don't have time to help me, or they're too important, and they were gracious about it?
Yeah. I mean, when I first became a CFO and I was now having to think about taking the company public, I thought, well, how am I going to do this? Like, I need some help. And so I reached out to other CFOs. I asked people for introductions. Some of them, it was just on LinkedIn kind of, hey, I'm so-and-so. And every single one of them responded. And it was a case of, I spoke to people about, hey, we're going public. Like, how do I think about banker selection? And so I just found that people just said yes. So I think as well, like if you're a CFO and you're asking another CFO, but early on in my career, I'd realized that I could ask people as well around, oh, I'm solving a problem. And sometimes you feel as though they're going to expect that I should know the answer.
Yeah.
But people don't. It's like, so sometimes you say like, hey, I've been trying to solve this out and this is where I'm at, but I'm not sure I'm on the right track. Like that's often a good way of saying, it's like, this is what I've done. It's not like I'm going to you with my problem, but you're going to with like, I've been trying this, but I haven't got it right. And so can you help me? And people always want to help.
That's great advice for people, because it's an easier on-ramp to say I don't know something, and it shows that, listen, I'm serious about this. I've done some of the work.
Yeah.
Next one for you, more of a technical question. Can you walk me through your finance software stack? What tools is your team using today to get the job done?
We use NetSuite as our ERP. We use Zora for our billing and our revenue accounting. We use Coupa for our whole procure to pay cycle. We use Anaplan for planning and forecasting and incentive management. We use Avalara for tax. We use Workiva for our SEC reporting. Actually, we use Coupa now for our expenses as well. We use Workday for our human capital management. So we've actually tried to consolidate around a smaller set of platforms, because in my early days at PagerDuty, we were kind of acquiring every SaaS tool that was out there, which made it all pretty, confusing over time. But now we have consolidated around that set. So obviously new tools. We're evaluating a tool right now that's AI based, that will help with some of the revenue accounting memos. So that's an interesting one for me right now. And then from a data perspective, we have Snowflake as our data lake, and we have Tableau as one of the primary mechanisms that we use to extract data, and that my FP&A team uses that stuff fairly aggressively together with Anaplan. So we continue to evolve, looking at what's available out there.
Love it. That's a strong stack. Last one I got for you, a fun one. What's the craziest thing you've ever had someone try to expense?
Yeah, so this is interesting, because from an expense perspective, I have actually seen someone inadvertently try to actually submit an expense that was for a television set, which I think,
my.
what ended up happening was they'd used the wrong card.
Yeah.
And so there was kind of a television set that was going on and they'd kind of used the wrong card to do so. And this had just fed into the system as an expense. It's like, not sure that this is the one. So.
Yeah, maybe they were using it to track the SaaS metrics on the wall. Someday
Right.
I want to have that. That's the ultimate goal.
And sometimes the television purchase is the right one. But of course, there's always these things about people trying to sort of, a manicure, a pedicure.
Yeah. Howard, this has been an absolute blast. I know you're a busy guy, so I really appreciate you carving out time for us.
No, well, thank you, CJ. I really enjoyed the conversation. So hopefully this is useful.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.